Now we're in a bear market, essentially. Certainly the NASDAQ is down 20% or more than 20% from its peak. And I always say to my team, it's darkest before the dawn. And I do think we're moving into some cathartic moments. We're certainly seeing the equity market rebel against what we believe is monetary policy that will end up being too tight. In terms of the midterm elections, one of the things that is happening here is investors are beginning to think about a shift to a Republican House and maybe a Republican Senate, mostly because of how badly things have gone in this year.
Founder and CEOs at ARK Investment Management, Cathie Wood has had a difficult start to the year. Last time the global markets faced upheaval during 2020, Wood came out as one of the best-performing hedge fund managers and returned 170% in the year. This time around, the negative markers are less unique than a pandemic, with sky-high inflation, rising interest rates, and geopolitical tensions turning investors away from risky growth stocks. Her flagship ARK Innovation ETF has fallen by more than 53% since the start of the year, and her portfolio size has shrunk from $33.08 billion at the end of December 2021 to $23.95 billion at the end of Q1 of 2022. Cathie Wood believes inflation and Joe Biden's poor handling of the economy may affect the chances of the Democrats during the midterm election. This view aligns with a recent poll which shows that Americans say gas prices economy will dictate midterm election votes. Americans deeply disapprove of President Biden's handling of the economy, inflation, and soaring gas prices, and say those three issues will dictate how they will vote in the midterm elections this fall when control of Congress is at stake, a poll released Sunday shows. More than 8 in 10 Americans, 83%, cite the economy as an extremely or very important issue in determining how they will cast their vote in November, according to an ABC News poll. Before we listen to Cathie Wood and her views on why she thinks the economy has fared badly, please give this video a like and consider subscribing if you are yet to do so. Thanks for watching our videos.
In the last month, the Fed did tighten up. We are now in the Fed funds range between 0.75% and 1%. So from basically 0 to 25%, we have, or 25 basis points, we've now gone, if you use the high end of that range, from 25 basis points to effectively 1. So up fourfold. And the reason I'm giving that as perspective is we are beginning to wonder if one of the policy mistakes here is not understanding that we're starting with interest rates at such a low base that when you quadruple them or go up tenfold, which many people think the Fed will do before all is said and done. So going from 0.25% to 2.5%, that's a 225 basis point increase. That's up tenfold. We've already gone up fourfold. On to the economy. Well, we've had some very interesting comments on the economy by business leaders. Just yesterday, I believe, Elon Musk said that he has a super bad feeling about the economy. And we're trying to figure out what he's looking at. We know his own sales were up. Tesla sales in the month of May, I believe, were up globally 60%, and almost every other auto manufacturer's sales were down, and some of them down by a lot. So it's not his own sales, except perhaps at the margin, maybe something that he's seeing in orders. He may be reflecting on the decline in total auto sales. So that's interesting. Jamie Dimon at JP Morgan talked about a hurricane. Be prepared for a hurricane. He doesn't know what kind of hurricane. Is it going to be a mild one, or is it going to be a Hurricane Sandy, which would be quite serious? But I think he's changed his tune a bit in the last month since JP Morgan reported earnings. So what is he saying? Well, he sees a lot of business activity and must see it slowing down, if I had to guess. And the president of Goldman described this environment as a confluence of shocks that in his career has been unprecedented. So again, he has a very good perspective, global perspective, every sector. And so I would say at the margin, these three business leaders are seeing the economy in some form of stress. We think the Fed is probably overdoing it. I think that certainly in terms of its intention to go up another 2 or 3 50 basis point increases. The market's railing against that, and it is perhaps because of this very low base that I mentioned in the beginning. We've already gone up fourfold from the low, still at a fairly low rate, 1% on the Fed funds. But the market seems to be saying that this is more than just letting the markets work and letting interest rates go up. The economy may not, the global economy may not be able to take too much more.
Cathie Wood also talked about fiscal policy of the United States. Fiscal policy is the use of government spending and taxation to influence the economy. Governments typically use fiscal policy to promote strong and sustainable growth and reduce poverty. The role and objectives of fiscal policy gained prominence during the recent global economic crisis, when governments stepped in to support financial systems, jumpstart growth, and mitigate the impact of the crisis on vulnerable groups. Through fiscal policy, governments can decide to spend money to provide public services, support the economy, and reduce inequalities. They can collect this money via taxes or by borrowing from financial markets.
On the fiscal policy side, it was very interesting to read President Biden's op-ed in the Wall Street Journal, and his focus was inflation, top of mind. Inflation is a big deal this midterm election year, and it could make the difference between winning and losing. So his 3 answers to inflation include let the Fed do its work. Now that's really interesting. As normally, a Democratic administration would expect a little more of a dovish Fed. They'd be arguing for less restraint. But he's saying, let the Fed work. And so I guess that's the Fed is an independent body, so the president shouldn't have any influence over what they do. But it is interesting in an election year to have the president saying, let the Fed do its thing, keep those interest rates going up. The second is pull the deficit down, the government deficit down. That would be more of a Republican argument. So again, a surprise. And he has suggested ways to get it down that include tax increases. We do not believe any of these will go through this year. This is a midterm election year. It's going to be very difficult to get agreement on tax increases this close to the midterm elections. And then the other ideas he has include, and this is predictable, trying to whittle down healthcare costs, especially for Medicare. That has been a weight on healthcare stocks recently, including the genomic stocks, which, again, if genomics companies can evolve cures, that should save a lot of money, but it just won't be this year. It'll be over the long term. And then he also is suggesting investing in new energy and so forth. Again, that's a longer term solution. So nothing really is going to come out of that for this year. So in terms of the midterm elections, one of the things that is happening here is investors are beginning to think about a shift to a Republican House and maybe a Republican Senate, mostly because of how badly things have gone in this year. And one of the things we're hearing is that there will be less pressure on technology and maybe more of movement towards it. For example, telemedicine in Medicare. That's a great way to reduce costs. And so we believe that the telemedicine companies are probably going to be benefited by a shift, if there is a shift, towards Republican wins in the House and the Senate.
Over 70% of Americans disapprove of President Biden's handling of soaring inflation and gas prices, indicating that economic security remains a high priority for the voting population. Biden's approval rating has been sinking for months, dropping to the lowest level of his presidency in late May at 39%. Satisfaction with his leadership has been declining for the last year of his tenure in office, according to a recent poll conducted by the Associated Press and National Opinion Research Center at the University of Chicago. While many issues have plagued the Biden administration, economic uncertainty and dwindling consumer purchasing power seem to be contributing most to Americans' negative outlook for the country. Do you believe the current economic situation will have a huge impact in the coming midterm elections? Let us know your thoughts in the comments. Thanks for watching.